we can confirm, or we all agree with the idea that they are more vulnerable for financial exclusion, either because of the lack of awareness or lack of the society or the society norms. And sometimes they do not even have any forms of technological devices. And this is very essential to accept or to apply digitalization. So one of the things that we need to know whenever we are applying digitalization or offering digital financial education is to design a gender intelligent products that are specifically addressed for women. Because most of the products in the market, they are what we call gender neutral. But we must address the needs and the preferences of women, and they would accept it greatly, because lots of women stop they cannot start their business because one of the obstacles is that the many trips they have to make to the governmental offices and the issuing of papers. But digitalization would make it so easy for them and would give them a better environment. But they only had to be easy and to be informed, and we need to raise the awareness regarding this issue.
Thank you so very much. I found it very informative, actually. And then you did touch on two things that I'd really like to quickly just point out, because it would lead me to my next question, which is product design. Whether it is for the gender, whether it is for the persona, whether it is for the people, but the products must be designed to suit into the life. So the product is for the people and not for itself. So we have a lot of people churning out digital products for the sake of churning out digital products, because a product can do this, is fantastic, oh my God. But then, does it fit into the community? Does it address the case of marginalization? Does it address the case of gender discrimination? So that was very strong. And then the case of capacity building, which I would now delve to Dr. Clark, because I see him nodding and smiling, quite identifying with that. It looks like you have a little to offer to this, but before then, I'd just like to throw this question to you, because in the area of capacity building, I don't think one organization does it all. So when we look at collaboration and partnerships, which again have been proven to be powerful drivers of innovation in the tech and digital space, how can microfinance institutions collaborate with others, whether it's fintech startup, whether it's technology providers, just stakeholders, to co-create situations that will address the unique needs of their clients? Over to you, Dr. Clark.
Thank you so much, AK. And when you saw me smiling, my memory ran back in the days when I first encountered microfinancing. I think I was 7 years old, because my mother was the pioneer of the first group in Africa set up for Finca that went into this whole.
Good morning, everybody. It's nice to see you again. You're welcome back to Africa Financial Inclusion Conference Year 2023. My name is Ajitimobi Olumayowa. I'm the conference director. It's a pleasure to have you once again here. I'm going to bring in the keynote speaker for this morning into the studio. The keynote speaker today is no other person than Dr. Clark Kisembo. You probably must have heard him yesterday, because he was part of our panel yesterday, and he did a very good work on the discussions that we all had yesterday. I'll just give you a brief background about Dr. Clark Kisembo. Dr. Henry Clark Kisembo is a digital economy, investment and business development systempreneur who engages with enthusiasm and passion to make change happen, and harness it to create rapid impact driven suitable development and social impact. I'm pretty sure that by the end of this presentation, you'll get to know more about Dr. Clark Kisembo. I'm just going to stop here. He's going to talk more about himself and introduce himself better. I just want to do it that way. Thank you, everybody. You're welcome again. Dr. Clark Kisembo, the floor is over to you. Thank you.
Thank you so much, Dr. Olu, and a very good morning.
Dr. Clark, we can't hear you.
Do you hear me now?
Hello, Dr. Clark.
Yes. Do you hear me now? Hello, do you hear me? Do you hear me now?
Have you. We can hear you. We can hear you. We can hear you.
Great. Great. Thank you. Thank you for the introduction. And once again, a very good morning to you all who are tuned in. I'm Dr. Henry Clark Kisembo, and a practitioner in development. So I'm going to focus much on the advent and the current situation of microfinance. However, just to call on all those who are tuned in, please utilize the chat boxes or the chat rooms to send in any questions, supplement, or any contributions, such that I'll leave quite sufficient time for us to have a conversation. I love to have conversations than more of seeming to lecture. And I'm going to do more of a freestyling. So I am a financial economist and investment professional with a PhD in that from California, and I also have a PhD in development finance and technology from Florida. My master's is in public administration, but I've done professional courses in business and digital technologies. I've been in the field about 22 years, of which much of that, almost all my life, has had a link with the microfinancing and banking financial services, but also bringing in technology. I do work for Development Associates Link International, which is a private entity, a regenerative and transformative growth and development consulting, project management, and investment facilitation firm, with the objective of transforming families, societies, nations, and also countries. So presently we are in 101 countries, of which about 49 countries on the African continent, but the others on all the other continents, Latin America, Caribbean, Pacific, Asia, North America, Eastern Europe. So we have quite a huge team working in all these areas, delivering financial inclusion and business development with the social and humanitarian aspect towards business. With that brief, I would say that let me start by saying that microfinance started way back over a century ago. And over a century ago, remember that what was used as for trade was barter trade. Now, this barter trade is where if I have beans, I can, that is value to get cassava. But if I have potatoes, sweet potatoes, I can get fufu or yam for that. But then to be able to feed my family and also have what to contribute to the society or groups, which was mainly driven by opinion leaders and community leaders, you had to have a ban. So bans these days are called storage facilities or silos, and but they used to be bans. So you keep some in the ban, and then you have what you're taking to the group, and then when you sit in a group, because that is the only way in which social capital was built, in which you had to know people around your community or your society. So basically, I didn't want us to forget that microfinancing has a history stretching right back. Only that the medium of transaction is the one that has evolved over the times. Fast forward, we come to the 80s. In the 80s, the computer was available, and that is the first time that microfinancing was encountering a transition from manual books into technology. But also remember that the centuries back, it was either writing or it was specifically trust-based, because you had to be a person of stature to be respected in community and society. You had to be trustful or trustworthy within the community. So come the 80s, 1980s, there was a transition from the man of books. And I remember personally the time I encountered groups in the new age. In the new age was when the first group that Finca had sitting in Uganda, Kampala. I think I was about 7 years, but my mother was so involved in mobilizing women to come and join this new financing engagement. And I kept attending some of those meetings and got to understand what exactly they did. Like they collected money, savings, and then they lent each other, but under the guidance of a loans officer. Now, with that background, I found myself also into the same field. One is being a businessman, because I run businesses, quite a number of them in different sectors, and they are all subsidiaries of Delhi, because Delhi is a group. So it's a group on many companies, technology companies, companies in financial services, companies across 16 sectors. And so my passion has always been inclined towards inclusive finance, ensuring that society and communities can engage in economic activities that can generate for them finances to be able to access the basic needs to life, but also to start growing and get to another status. So that brings the whole purpose and essence of microfinancing, that traditional banks, what we'd call the brick and mortar, did exist, but a lot of people were left out. One, because of it was intimidating. A person just can't come out of a garden and enter a very nice, clean, tendered building, but also they were quite very far from communities. So the microfinance institutions brought in a lot towards getting closer to the communities and people. And these communities are not only rural based, but also, as I intimated yesterday, that also in cities, because in cities, remember there was a time when there was rural urban migration, population explosions in cities, which created slums. But these slums, for example, in Kenya, Kibera is one of the largest in the world. perhaps not now, because my company has been so involved in turning around the slums across Africa into affordable housing and more decent and dignified housing projects. And this is also a microfinance model, because they don't pay at a go, but they collect money, and then this money they make a pool, which pool then they can save or use to be able to own a home. They pay for a home over time, maybe 5 to 10 years, depending on their revenues. But when they have a dignified living, so a lot of these slums, Kibera in Kenya, Katanga, Wandegea in Uganda, a number of them in Ghana, in Accra, have changed. But we saw few microfinance institutions in the 80s, 90s, and come towards the end of the 90s, they were becoming quite a handful, because I remember in 2000, when I was joining post bachelor's, when I was joining a telecom group, I brought up a model called the Rural Markets Initiatives. And my focus and heart was at how do we use communication to enhance growth within sectors which are underserved by typical traditional banks. And the project was approved, and I had to roll it out initially in Uganda, across the whole country, installing masks, I did a number of things, but bottom line was that people got information about pricing in the cities, and then they brought this information back to their groups, where they were collecting money and saving. But also, when this money was enough, they could go to the nearest, what they call a microbank, which is of course a microfinance institution, and they would say, we have this amount of money. Can you top up for us? We start a project, maybe a chicken project, a carpentry project. So the purpose was to transform livelihoods of those who are underserved, yet they are, one, economically active, but don't have markets open for them because of lack of information. But also, they needed some organization to be organized and recognized, which today we call credit history, because what was in their books, if it rained and the ink is gone, then you may lose out to the history. But they had their cards, what they call passbooks. So what are the learnings over the years? Because I've worked in over 29 countries on such missions to ensure that inclusive finance for all is there. And the women, including women, the youth, including people with disabilities, including people at risk, for example, the seafarers, or what I would call fishermen or fisherwomen who are living on water. They are very far. You have to go on canoes to get to them. How do they get served? And that's where technology, fast forward, came in. So, but key is to understand, before we talk about technology, that microfinancing is driven by some key factors. And these factors, once you remove them, that means that the whole essence of microfinancing or microbanking is gone. The first factor is social capital, that persons depend on social capital, that it is people know people, and it's one of the drivers of microfinancing, because they know it's a time when they can meet, talk about what's happening in their communities, but also they can guarantee each other without specifically having a collateral in terms of assets, let's say land, or maybe a television or a radio, or all that kind of stuff called collateral. But even the group guarantees, what we call group guarantees, for those who took the model of group guarantees, but also the cluster guarantee, that if I know somebody, I know their personality, their character, then I can sign up for them as a guarantor. There is the issue of trust. Microfinancing has been so much an issue based on trust. Once that trust is gone, then you don't have, you lose the foundation, because remember that we are in a technology evolving period, but this technology is evolving very rapidly. However, we can't forget the fact that trust is very key, and the trust is one of the reasons that even those whom I have visited in Uganda alone, I think I've worked with over 500 institutions across the world. There are multitudes that I've worked with, and trust is very key in also managing the aspect of risk and default. And coming in the issue of when you're talking about microfinance or microbanking, you don't sit in your office and then come up with the products and then go to the people and say, these are the products we have. Experience has taught me that you go and co-create, ask the people, what are your needs? What are your pain points? Then come and then design products which exactly suit the segment, particular segment, the particular people, even the particular community that you're dealing with. And when dealing with this community, you must be able to understand that people don't sleep, wake up, eat, and then sleep and go to the gardens and come and boom, they have money. No, there must be some economic activity which is happening. And this economic activity, they could have initiated it through selling their products, agri products, or any products that they have come up with, and they get some money. So economic activity has to be enhanced, but also key to this is personal finance management, which we could put under financial literacy, and later on also digital literacy. Another important issue is that as microfinancing and people are related, in order to generate growth and development, because it's useless to even have microfinance or even talk about it if there is no growth and development, or what we'll call sustainability and impact. Daily prefer to call it regenerative and transformative growth, because for us, it's not one project and then you're gone. It is continuous. Even me, when I'm passed on, generations to come will find daily and they'll continue with that. So it has to be regenerative and transformative, which means that it should be sustained beyond whether it's donor funding or the immediate financing available, but also it should continue. There should be money in these institutions to keep economic activity running, but also transformative. One who was living in a rugged shelter house should now own a home, a dignified life, and that is the whole essence. Coming to technology, technology has really evolved and advanced very fast. Many of the companies that I know currently are into digital finance, that was never their intended business. For example, some were bulk SMS entities that found themselves jumping onto digital finance, which is very good, because there is always transitioning, there is always pivoting. Daily, over the last 19 years, this October will be 19 years, has also transitioned quite a lot. because it has to go with the times. People believe a lot in Delhi worldwide, and has a lot of influence on the financial and global markets with a focus on the underserved communities. So when these companies had to jump on digital finance and deliver, a bulk SMS company has to rethink, their business model. But their business model is not all about having software developers and then they sit and see how money moves. Because remember that the time M-Pesa came to light, I was in Kenya. I was one of the technical advisors to Safaricom. And I saw all that come, even through the venture with the Faulu. Personally, I designed a model of agency banking for a number of countries, including Uganda, and worked with technology companies to have this realized, and did a lot of trainings. So, but the gap I realized and I saw, which I had to firefight, which has kept me a lot in the field, because 65% of my time is in the field, is that the fintechs, the fintechs of back years, let's say 3 years pre-COVID, were picking products, as some assuming, and taking to the communities because it's all microfinancing. When you talk about microfinancing, it's not only the microfinance institutions, but talk about any institution that is targeting the micro level. So the technology comes in, and technology is an enabler which is supporting the microfinance institutions to be able to reach out to people in real time, and promising safety, and also to enhance the core banking systems of the microfinance institutions. I remember in the year 2000, the first technology I was introduced to was a loan performer, and of course, we had a lot of versions, improving the versions. But come now, the number of technologies, the issue is that they have to be aligned with the purpose and the model of microfinancing. Because if I go to an institution and it is showing me, for example, a repayment rate of 98%, and a report generated on default rate is about 68%. There's something terribly wrong with the technology they're using. And so I've been involved so much into technology audits, but also writing the RFPs for these institutions to be specific on what we need or they need, and this is integrated. Open APIs have been at the forefront of advocating for open APIs with telecoms, with financial institutions, microfinance institutions, and this has also enabled now interlinking of institutions, but also the microfinance institutions having different branches which are linked and can have transactions real time. The challenge here also, of course, I've spoken about the technology development. The development has to be aligned, whereby a software developer sits with a microfinance accountant or finance specialist who understands what they need, and then will inform what the software developer does. But also not underscoring the fact that connectivity, we've seen challenges along the years of connectivity. When I was rolling out rural market initiatives so many years ago, what we call the masts or the towers, we used to call them base stations. And I came up with research, and this research is what led to what we call the village funds for rural markets initiatives, whereby I knew there were antennas which could pull which could pull connection or connectivity 60 kilometers. So if I join two, I would be targeting 120 kilometers. No matter where the base station is, I could connect them until there is connectivity. But till today, there are a number of them struggling with connectivity to the fact that they have to reconcile at 9 p.m. in the night. If I am fraudulent, I can go and withdraw money like 5 times if I understand that this institution is not real time. So connectivity is one of those issues that I've realized has to be enhanced, and assurance given to customers. The loans officer themselves, they need to be, because when you're talking about a digital transformation journey in microfinance, that means the internal in the institution and the external, the customers of the institution and also the staff of the institution. If a staff goes out and has not understood the product, they are the face of the institution, then that institution is going down. But also if they fear that it risks bringing down their jobs or risking their jobs, then they'll go and decampaign the technology product. But the good thing is that with much internal awareness and education, because a lot of this digital finance, for example, has been considered that that is Kisembo's product. You go to a financial institution in some community and ask them, tell me about the technology you're using. And they say, no, 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 no. Kisembo will come tomorrow. So you need to wait. I told them, no, no, it doesn't work that way. Right from the board, management, and the management all have to be involved. I will finally say that in the current, we need to think of how do we drive economic activity. That is through a value chain approach, building ecosystems, and then have business driven and focus, but also security on the technology, a multi-level authentication, which is simple to understand, but also institutions should have what we call firewalls. If you have below 4 firewalls or levels of approvals, please, you need to increase that. Big data, blockchain, artificial intelligence, all these are good, and they can increase the uptake and adoption of technology within microfinancing for the welfare of the targeted underserved communities, and also for institutions to make money, because they are not charities. They are there to make money. There is profitability, there should be scale, there should be viability, and they should be sustainable to continue and grow. Thank you so much, ladies and gentlemen, and I'll ask the moderator to open up for any questions or supplements or contributions. Thank you so much for giving me this opportunity, and looking forward to engaging more with anyone who wants to know the depth of microfinancing and technology. Thank you so much.
Thank you so much, Dr. Klako. You have actually broadened and enlightened the space for this discussion and for the conference for the entire day. And I'm pretty sure that people have heard what you have said. Thank you for what you guys are doing at DALI. I guess one of these days we need to bring you on board, and you need to share more about DALI with us, so that people can actually see the impact that you are creating, not just in eastern part of Africa, but all across Africa, Western Africa, and the Northern Africa countries. It's